What's going on, everybody? This is Tyler DuPont from Augury Research, and this is Not Your Father's Stocks. I am here today with Srivatsan Prakash. He is elite investor on Instagram and the host of Market Champions. Sri, how you doing, my friend?
I'm great. How are you?
I'm doing good. Thank you for asking. So you're wrapping up school.
Yeah, it's the last day in a very long time, so I'm pretty excited for the next 2 weeks because no school and I actually get to work on stocks and investing. So it's going to be fun for sure.
Oh, I know. I remember when I was in school, it was such a relief to finally, end the semester or whatever. I'm sure you're, not gonna, I see you smiling over there. You're probably not going to stop smiling all break.
Probably.
So you're going to be hammering some stocks on over break.
I hope so. Yeah, for sure. I'm going to try research as much as possible, learn as much as possible. I've got a few pretty big interviews coming up, so I better not screw them up. So
Yeah. If you guys don't know, if you guys have never listened to Market Champions, it is a really, really great podcast. It's actually my second favorite podcast behind Farnham Street. It's probably the only other investing podcast that I really, enjoy listening to regularly. So if you have never checked that out, be sure to check it out. We'll link it down below. So Sri, you said you are going to try to dive into some stocks over your break. Can I ask, do you have any plans or do you have anything that you really look for when you are, diving into, stock specific research?
yeah, so one thing that I have learned from you, from Ben Graham, is the value of a balance sheet margin of safety and trying to find something that's cheap from an asset standpoint. So recently, me and you have been discussing about a company called CMLS, Cumulus Media. It's got loads of cash on the balance sheet, was selling, I believe, at 0.5x cash. So even if you just look at the cash value, there's still 100% upside on that stock. Apart from that, it was selling at about $5 when me and you bought it. It was The book value was about $20. So even if you took the book value as the price as the value, sorry, if you took book value as like the intrinsic value, you would still have a three bagger right there, because from 5 to 20 you have three bags in the middle, so you have a three bagger right there. So that's the first
Yes.
thing.
CMLS was pretty cheap when you kind of put it on my radar. I'm definitely glad that shot that over to me. That kind of goes into like what Munger says, where you know you look for businesses that are going to drown you in cash. You know,
Right.
when we're buying CMLS at 5, you're getting a ton of value there. So it's kind of
Exactly.
hard to pass up on such a good cheap opportunity. And I know that the overall industry is kind of, I don't want to say, a lot of people are saying, radio's kind of dead, but as we know, they have the whole podcast thing. There's still money to be made there. It's just not
Correct.
going to be as much as maybe people were expecting, 3 to 5 years ago.
Right. And then the other thing is, they're also, as you mentioned, they're also focusing on podcasting, and they've got like big podcasts like Ben Shapiro and Jordan Peterson, and that really just proves the quality of the product. And probably the single biggest antithesis, the thing that sort of destroys their hypothesis, is probably going to be the amount of debt they have. But the debt isn't a problem till 2026, and the CEO is pretty committed to paying off debt. So if you look at the earnings call, they've been paying off mounds of debt. They filed for bankruptcy in 2018. Then since then, it has like roughly like 17x or something when I bought it. So even since bankruptcy, they've been paying off a lot of debt. They're just selling off the radio station, so they're getting out from the old business and getting into the new one, which is probably the biggest thing that's
Yeah,
happening.
that's what we want, right?
Right. Exactly.
I like that a lot. And, like you had just mentioned, they have some huge names, and that's got to be super important, kind of in
Exactly.
this scenario of if they are going to be, pushing a podcast theme, well, who do you have? They have big names. And I think that's pretty important
Right.
for that
Exactly.
thesis. So you kind of mentioned that you really look for a balance sheet margin of safety.
Yeah, it's sort of like my sweet spot. So like compared to say GARP, I mean I'm fine with GARP, but then like deep value or finding like really cheap things is my margin of my sweet spot. It's
Yeah,
probably
and is that
yeah,
you think that's more of a, an emotional thing where you just feel more comfortable,
yeah,
sleeping
exactly.
at night?
Yeah. So it's a lot easier to anchor on what we know than to speculate on what we don't know. And GARP usually has an element of speculation to know, what's going to happen in the future. Depends on future cash flows, depends on a future event actually happening. But then, if you have something that's already there, the cash is just sitting in the bank. People just have to realize, this thing is really cheap. If you buy it, we can make a lot of money, and then the price goes up. That's so much easier, and it's also so much more certain compared to uh, GARP.
Yeah, I agree, and I really like to kind of focus on that as well because when the company already has all the cash, on the books, it's kind of just more about how do we get this cash out of the business and into our pockets, and there's many ways to do that, right? Dividends, buybacks, etc. So I
Exactly.
agree with you there. So I wanted to ask you, who are your top three favorite investors?
It's gonna be fun. Pro- First, I would say is probably Warren Buffett.
Okay.
And when I say Warren Buffett, I usually mean like the older era Warren Buffett when he used to buy nets and deep value. That's like my favorite kind of Warren Buffett. But then the modern day Warren Buffett where he looks for moats, and that's also pretty good. But a lot of the time, especially in micro caps, it's pretty easy to still find deep value and make money. Even Warren Buffett and Munger have talked about it. It's just that Berkshire Hathaway is too big for those opportunities. So
Mhm.
uh, even they realize that still in micro caps, you still have these deep value opportunities. So if you're able to do some simple investing, why go for something that's much harder? And probably second would be George Soros. Uh, you probably expected that.
I was almost surprised that he wasn't number one.
So you've got George Soros. I think George Soros is probably like the greatest, from a macro standpoint. He's probably the greatest investor of all time, and macro is a bit of my hobby right now. So I think George Soros's book, The Alchemy of Finance, is really really good. Especially when you look at things from a macro perspective. It talks about these reflexive loops that actually drive markets compared to what the norm thinks, and why bubbles happen, etc. And how. Um, he was probably the greatest trend follower of all time because he realized that trends were probably the best way to trade, and he was a big trend follower. He has a lot of theories about trends and boom bust cycles, etc. that he has in his book. So I think that's my second favorite. Then third favorite, I'm probably gonna say Tyler Dupont for sure,
Thanks. Yeah, you
and
gotta love the guy that shorts these micro caps.
teaches you how to buy deep value.
I love the deep value stuff just because kind of how you mentioned earlier. It's easy, right? It's simple,
Exactly.
and when I was younger investing, I didn't know that much, so these were ideas that I could get my money into and let them play out while I kind of learn other ways to invest capital, allocate capital. So yeah, we're kind of on the same page there. I also kind of wanted to ask you, how would you describe your investing style? I know you like the macroeconomic stuff. Are you allocating money to those ideas, or are you kind of sticking to the simpler stuff, which is kind of like the nets or the dirt cheap businesses, as we would call
Yeah, I would say most of my portfolio would be dedicated to value and to cheap stuff.
them?
But I would still like put about 5% into those macro ideas, just to test them out, just to play them out. And I would say that macro is probably a lot harder than value, so it's a much better idea, because macro is number one a big money game you know as you've
Hmm.
also mentioned. So the thing to focus on is that value is where you can make a lot of money. It's a lot simpler. It's a lot more straightforward as well. You can look for cheap current assets and a decent management, the good product, and then boom, you've got pretty much a winner right there. Uh, so yeah.
Yeah, I like that. So it is a lot more difficult to probably generate ideas for, the macro stuff. As far as idea generation in smaller caps or in these value stocks, are you looking for industries or are you more focused on a bottom ups approach?
We say that again.
Are you more focused on finding, new ideas through maybe going and looking through industry specific stuff, or a bottoms up approach where you just really care about how cheap the business is?
I think it would be a combination of both. For example, right now, a lot of energy companies are cheap. So I've been reading a couple of books about how to invest in energy, understand the terms, understand what actually drives the business. So from that standpoint, because recently we had the big energy crash in April, and then even since then, a lot of energy companies been trading below cash. And on my value screens, a lot of the energy companies keep popping up. So and that's a scenario where you want to sort of understand the industry before you actually go into the business, and then that's you're kind of taking a top down approach because you're focusing on the macro, which is the commodities, which is the commodity crude oil, and then after that you're going and finding cheap energy companies, which you can then analyze with the bottom up approach. But then on the other hand, you still have the bottom up approach where you just, for example, Cumulus Media was a pure bottom up approach.
Mhm.
I wasn't looking for cheap radio companies. It just seemed to pop up. I decided to research it. I found out that it was like ridiculously cheap. So I put some capital and so far it's done really well. So yeah,
Yeah, nice. Okay, so 2021, what are your three goals?
three biggest goals. So 2021, I'm going to graduate from high school, going to university. So the first goal would be to try and find scholarships to get my whole university paid off, and probably get some extra cash at the end. Now if university is under say $10,000 and I have 12,000, then I could put that $2,000 to work elsewhere. Um, So my first goal would be to sort of handle university correctly, get it paid off, and then also sort of get. I, so so probably get into a good university would be like the first goal. So get into a good university and get it paid off. So that would be the first goal. The second goal would be uh, to grow the podcast and to grow the YouTube, which I just started. So I hope to get the YouTube to at least a few thousand subscribers by the end of 2021. So that would require me to become a better marketer. So I have to learn some marketing, how to sell to people, and how to edit videos, etc., to make them more salesy, make them more clickbait, so that people click and watch them. So, and then the third goal would be to become a better investor. So, if um, in 2021, if we see sort of a big crash, or which is what a lot of people are, which is what a lot of people are saying will happen, then now I want to be on the side that goes contrarian, that goes and buys up, the dirt cheap stocks, because we're going to see a lot of businesses trade undervalue, once the whole thing comes down, which I think will happen. I don't know when it will happen, but I think it should happen. Probably say within the next 24 months. So I think if it happens in 2021, I want to be ready to buy it. So first would be university. Second would be to get the podcast on YouTube, getting bigger and making money. And then the last one would be to become a better investor.
Yeah, so you kind of touched on there that you do feel that the market is, overvalued here.
Yeah,
Do you think it's significantly overvalued or just slightly overvalued?
I would say right now, I would say it's pretty euphoric. But
Mm-hmm.
if you look at the way the S&P is structured, about 25% of it is just tech, and then the rest of the other sectors form just 75% of it. There's 11 sectors, and out of which if one forms 25%, then you've got 10 that form 75%. So they play a much smaller role compared to tech.
Mm-hmm.
So I personally think that the FANG stocks aren't like fairly valued. I think they're valued a little too much. It's not that they're bad businesses. It's just that at what price. So
Mm-hmm.
I think that's probably the single biggest consideration. And the other thing is that I would say euphoria is pretty extreme, but but I don't know about whether the market is valued fairly or not. But I would say that euphoria as a whole is a new extreme because we've seen small contracts, sorry, small traders buying a lot of option contracts, a lot of calls, and that's a big sign of speculation, especially from the little guys who actually have no idea what they're doing with their money. So we saw that in yeah, we saw that in like the late 1990s, where a lot of people thought that buying call options and buying into IPOs would make them rich. And then today, Bloomberg published a story about a 32-year-old video producer who who became rich by putting his entire savings into Tesla in 2017, and then today he's a millionaire. And I think I think that's sort of a sign of euphoria. I don't think it's the sign, but I think that's probably the other thing. And then there's obviously this um, whole thing that's structured across the stimulus hopes, and every single day for like the last 6 months, markets have been going up on stimulus hopes and vaccine hopes. So I don't know
Mhm.
what's going to happen, but I just think I just think it's valued significantly more than fair value.
Yeah, and I agree with a lot of what you said there. The whole stimulus thing and the whole, there's a ton of speculation, going on in the market. And,
You see
I
these
know,
bubbly stocks with like with like little to no revenue. Like we saw FCEL today, and you've got these other these SPACs going up 100% on the first day. We saw DoorDash, which was supposed to IPO at like 60 or 80, and then it opened at like 200 or something. So
insane, just insane. And it is insane. What are these people doing? But I can't even contain myself. But yeah, it's crazy out there. Like Apple's a $2.2 trillion company trading at a 40 multiple of earnings. Like, is that
exactly.
not crazy?
2 point, yeah, exactly. It's over $2 trillion. Like the U.S. economy is 20 trillion, and Apple is like 10% of like U.S. GDP. Like it's like so much. I don't think people actually understand fundamentals, and it's almost like fundamentals don't matter anymore. And because
Well, I actually had I made an Instagram post today, and I put up a post just saying Tesla sucks, and you know I kind of did that on purpose to stir it up a little bit. But someone legitimately messaged me and told me like, "Hey, bro, fundamentals don't matter in Tesla. Don't you know that?" And you know, I can't even respond, but you know, I just want to say like, don't you understand that buying stock is like you're becoming the owner of a business. And as the owner of the business, I've been saying this a lot lately, but as the owner of the business, you really only get however much money that business turns in profits and then distributes to you.
right,
So these guys that are just playing, I call it musical chairs on the way up, a lot of them on the way down are going to be, sitting their asses on the ground with no chair. And it's not going to feel great. It's definitely not going to feel great. And it worries me because I just have a lot of friends that are, in these stocks. Uh, that's going to be money that just kind of disappears on them. And, I wouldn't want to be sitting I wouldn't want to be I wouldn't want to find myself sitting on the floor. So I keep a lot of cash. And I know as an investor, I kind of want to hear your thoughts on this. How do you keep yourself from playing, the crowd's game and buying call options on something like Tesla or, YOLOing it with Wall Street bets?
I think I probably think that has to do with where I started as an investor. So a lot of people start off investing by just owning a stock without actually learning about investing. But I kind of started by learning about investing before actually owning a stock. And I personally don't feel comfortable owning anything that I don't think has a margin of safety. So if something doesn't have a margin of safety, I don't feel comfortable owning it. And if that's the case, now I probably won't be. I don't. I still don't get how people like own Tesla and they're able to sleep at night. Like it's just crazy.
Yeah, well,
I,
they're insane. You got to be insane to buy it in the first place. Of course, they can sleep easy. They don't know what's going on. They're clueless.
they buy it thinking that it's it's something that's going to keep going up, and one day it's going to stop going up. But then there's a quote by a former CEO of Citibank, Chuck Prince, I think. He said that while the music plays, we have to dance, and that's what's going on right now. The music's playing, then all these little guys are dancing, but then they have like no idea about the valuation. They have no idea about the business. They have no idea. Like I don't think they've ever opened the 10K of Tesla. If there's sort of like an investors owning shares by a number of times the 10K has been opened, it's probably like the lowest for Tesla.
Yeah. I, the whole Tesla thing is just absolutely insane. Talk about a popularity contest. I know, don't get me wrong, Tesla's got some really awesome stuff going on. And, in the grand scheme of things, they are innovating at a really high level and they are, making the world a better place in a sense. But in terms of investors pouring money into this business, investing is not about buying what's cool. It's about making money. And
Exactly. And a lot of these people, what they're doing is they're not actually researching the company. They don't know what's going on in the business.
yeah, and how dangerous is that for your long term? Like a lot of people are always saying, oh well, I'm a long-term investor in Tesla. Dude, you don't want to be a long-term investor in Tesla. You're not going to get any returns, brother. Like, it's these
And
guys
it's
are
like,
nuts.
and it's like these EV companies, they're car companies, but then they're being valued as if they're software companies. Car companies usually tend to have margins of like under ten
Car
percent.
companies.
Like, in general, just car companies. Like, forget the fact that they're EVs. Just car companies, they tend to have gross margins that are like 30% or 20%, but software companies have like 60, 70% margins, which is why they have such a rich valuation. But then these companies, which are supposed to be capital intensive and low margins, and they're trading like software companies. So, Tesla produces like makes like less money than like the top 10 car makers, and it's worth more than like Berkshire Hathaway. It's worth more than like all the car companies combined. And then to add to that, the S&P 500 is adding Tesla, which means that there's going to be $80 billion, as you mentioned in your article today, $80 billion in buying for Tesla. And 80 billion is
Let's
a
talk
lot.
about that. How do you feel in terms of, do you think it's a good idea that Tesla is being added to the S&P 500?
I mean, it's like asking someone in 1999, is it a good idea to add Enron to the S&P 500? It's like a disaster waiting to happen. Like,
Do you think, I don't have a really great thesis behind this idea, but I actually think that there's a chance that today marks the top of Tesla. And after this, once I don't are they doing a 2 day, are they splitting up the days where they actually include Tesla, or is
I
it?
don't know. I don't know about the mechanics of how it's getting included, but a lot of people are just trying to front run the inclusion. So
I know a lot of people think that this thing's going to go up, and I actually really want to watch the close, because as I was reading, a lot of these people that actually have to get in Tesla are going to be waiting until the order flow data comes out, and then they're going to basically turn their algos on, and it's going to be apparently it's going to be, it's going to be a firework display into the close today. So I'm kind of interested to see how that plays out. And I'm thinking, if there is, a massive move higher, which I've heard could be the case, um, if that does happen, I think it's going to
I've got
be,
Tesla on my screen right now. It's collapsing. It's down almost 1%. It was up like 2% today, but now it's down like what? It's down over 1%.
well, 1%'s not enough to get
It's
me
not
anywhere.
enough, but then Tesla is something that never goes down apparently. So
Yeah, and I think a lot of that has to do with the amount of call options being purchased on the stock.
right,
Because when you buy all these calls, the market makers got to go in there and hedge. So,
right, exactly.
we're
And people don't actually realize like that mechanic actually happening. So when option values go up, people when options the number of options bought go up, that means the market makers have to buy more shares,
yeah.
and they've got to delta hedge their position, so they've got
Mhm.
to buy the shares relative to what the delta of the option is. And if they don't do that, the market maker has a risk which that they could lose money and they could be on the wrong end of the trade. So that causes a massive increase in share prices. And the other thing is the Federal Reserve with lower rates. What that means is the Black-Scholes model now has a lower rate for an input, which makes options cheaper, and that's something a lot of people don't talk about. And similarly, when you have lower rates, the discount rate on DCF models also goes down, which pushes values higher. So
Yeah. And I know for me, I use a 15% discount rate on most of my ideas, maybe
yeah,
10 sometimes, but yeah. So as interest rates are going lower, it just naturally inflates stocks.
right.
Like we need that.
Yeah, yeah, exactly.
It's in a if it would be extremely difficult, let's say if we had a multi-billion-dollar fund, and you have to, your job is to allocate people's money. I mean, there's got to be a serious lack of ideas, and I think that has to be, in part why we're seeing something like Apple trade at a 40x multiple of earnings, regardless of the fact that it has a $2.2 trillion valuation. So
Right.
I don't think the job is really easy anywhere unless you are an individual investor and able to, like, I think a lot of people miss the idea that, as an individual investor, you're free to play the whole market any which way you want. And that creates a massive opportunity to not expose yourself to all the risk that's out there. Because, you know, Sri is in the Augury chat, and we're always diving through like dirt cheap businesses. And, you know, it's a real treat to kind of be able to find these ideas because not everyone is allocating their money this way. And if we are, taking on less risk, you have to think that we're going to be in a lot better position,
Right.
especially when the market pulls back. But over the long term, you know, we're going to, like that CMLS stock. I mean, we're finding a lot of dirt cheap businesses that we don't really care if there's not a lot of liquidity because we're not trading, hundreds of thousands of shares. We're
Just
trading
buying smaller. Yeah.
a couple thousand share blocks. So, it's these investors that are new to the game, which there are a lot of people that are, first time walking into the market and kind of going out there and playing in Tesla or SPACs. And these SPACs, generally speaking, SPACs are really just below average, opportunities. Like these things usually are pretty scummy companies overall. And this year it's been truly amazing. Like they're flying off the shelves. Like everybody's got to get in them. SPACs are all over Twitter, all over Reddit, and I know you've seen it. What's been the craziest SPAC that you followed this year?
I don't know, to be honest, because they've all been crazy. But then
Yeah,
the
it's
problem is like every single investor actually has a SPAC now. Like you've seen Chamat, he's got a SPAC, and then Bill Ackman had a SPAC, and oh, I think Chamat had three SPACs actually. So
yeah, no, he had multiple.
yeah, exactly. And you've got all these SPACs for different companies, and people just buy them up. Like I don't get what the value is in buying a SPAC. Like it's just taking like another company public or something.
Yeah, it's just pure hype. They pop, then that's it. They pop, and then
Right? The
next thing you
drop.
know, they're on CNBC and ripping to the moon, and everyone's making money, and everyone's making money, and everyone's making money. But what happens when it's time to sell? Like we can't all just sell
Everyone
at
sells,
once.
right?
Yeah, it's just not gonna. It's not gonna work. Uh,
And you have like the sensible guys actually shorting this stuff, but then they're forced to cover because the retail guys are still buying, and they've got to buy as well, and that keeps pushing prices higher and higher.
and as a short seller, since I do a lot of short selling, I will tell you, I say it all the time, like I'm not shorting any SPACs because it's generally not a good idea to short businesses, when they are in innings 1, 2, and 3. It's just more difficult. You're leaving yourself exposed to crazy stuff to happen in innings 4, 5, 6, 7, 8, 9. So I like to find these things like, in innings 7 through 9, where the game is, crystal clear as to what the outcome is going to be, but the market will still, offer up, I would say, good opportunities.
I remember when you were like short Neo, I think last month or something, and then it ripped higher, and it was just crazy. Like if you don't have risk management and if you don't have stop losses in place, you could get your shirt ripped off, and
Yeah.
that's what's happening to a lot of the short sellers right now.
Yeah, and I'm super fortunate to have explored and learned about short selling at a time where the market was not as crazy. Like, I'm short selling relatively active. I've had a really slow, probably December and probably end of November. But when we see, hopefully in early 2021, I'm going to be on the ball, every single day trying to find opportunities. But in this current market, it's almost a blessing and a curse. It's like, if you are going short, and you're finding out really quick if you're right or wrong. But the problem with that is like, these people that don't have experience and they don't have discipline and they don't have their emotions kind of under control, the stocks are moving so quickly that they're just getting ran over. And these, I'm watching stocks go from 10 to 60. I mean, holy smokes, like within a week. So, I mean, if these guys are playing, without, tight risk management in this market, you got to be out of your mind. And when I was learning about short selling, uh, you know, I guess, around 5, 6, 7 years ago, the market wasn't super violent to the upside. Like, this move in March, since March when we hit that, that low to kind of now, I've watched the market just extreme strength. I mean, a lot of strength. And it's, with that being said, I'm not too sure that the market is, ready to go down. Like, we might have a vaccine here, and then I don't know. I don't know what's going to happen. And no one knows, right? I always just assume, I always manage my portfolio as if, there's a lot of risk on the table here. I don't want to get caught the wrong way. So I
Exactly.
generally, yeah, I like to hold a lot of cash, and then, as soon as the market gets a little bit shaky, then I like to try to pour on my shorts there. But I haven't even thought about shorting the market lately, because I feel
It's
like
so
we
crazy.
we might be, this kind of is I don't want to say it's a little bit like Soros, but I feel like Soros was pretty good at recognizing, okay, this was supposed to happen this way, it's not happening this way, and then the market trends that way for some time.
Say that again. What do you mean?
Like, when you get news of a stock, right, and it sounds terrible, right, and then stock should be going down, but it's actually ripping higher. Those that reaction by the market is really telling, I think. When I'm trading stocks, I notice, if I'm not getting the move that I want right away, like, my thinking is wrong. I've seen it where it's like, if you don't if you don't admit that you're wrong really quick, you get a stock that can really, really trend. Like, I think Tesla was a similar move to that. When it
Right.
finally did break that 420 area, that was not supposed to happen. And then since then, it's been up 700%.
Correct.
So
Right.
it's like, kind of like the investors, they think they're right, they get backwards, the market, kind of throws them upside down, and then they have to figure out how to make up for it. And, it's just, they get kind of tossed around like a rag doll by the market. And dangerous, it's a dangerous game. It is, markets are a dangerous game if you are not, playing with a risk-minded approach.
Right. And Soros has talked about this in the Alchemy of Finance, where up till a point, the fundamentals support the stock going up. So the stock goes up, the fundamentals improve, the stock keeps going up. And after a certain point, it's just people's psychology and people speculating that actually cause it to go up. So it goes up, and people think it's going to go even higher, so they buy in. That makes it go even higher. That's sort of like the top of a boom cycle, and then
Mhm.
after that the psychology reverses. So people realize that no, X is not true, and then it starts to go the opposite way. Stocks are going down. I want to sell, and then they sell. That causes stocks to go down even more, and then that happens on the opposite side as well. So it's usually sort of like a misconception that causes the uptrend, and when that misconception reverses, goes down. And the problem is I actually haven't been able to detect sort of a misconception in this market. Like in the 1990s, you had the thing about internet companies being the next big thing, and internet billionaires being like Rockefeller or something. And um, so that was what drove the 1990 cycle. And then in the early 2000s, you had the housing bubble, and people thinking that housing prices would never crash. And I find it funny because both Soros and Druckenmiller, both of them closed their funds, I believe, in 2010, right before this cycle. And in this cycle, there's almost like no misconception other than sort of like stocks only go up. So that's the only thing that I actually find that's driving the market. So I think that's it's like an extremely stupid belief, but it is what it is.
Yeah, there was a point in 2020 where I kind of looked at what was happening, and I was just like, do I want to play in this? It's that kind of dangerous, and I'm at a massive advantage because I am a long short investor. So not everyone can play the markets the way I do. I think just adding the optionality of short selling is an edge in itself, because no one on Robinhood, we have all these users on Robinhood, none of them can short stocks. I don't know, a lot of people don't have margin accounts, so they're kind of just they're stuck one way. And being stuck one way in this market seems like an awfully bad idea. So, these investors that are stuck one way and don't have, cash to deploy if things go wrong, it kind of worries me. And, I always try to encourage people to, like, a lot of my friends, I'm now 27. A lot of my friends are finally, starting to get some money under their belts, and they're getting into the markets. And they always want to ask me what should I be getting into. And as you know, like, I love dirt cheap cow
SECC,
companies.
yeah.
And I tell them about this dirt cheap cow company, and they go, you don't think I should buy Apple? And I'm like, no, like, I do not think you should buy Apple over a MuCell, or maybe CMLS, or ARC. Like, I truly believe that you should not buy Apple compared to these other companies that you have opportunities buying. Uh, but they don't understand that, and they don't feel comfortable kind of trusting that they're buying a business. They just want to buy that name. They trust the name so much. And that's kind of, I guess, the psychology of investing.
It's almost like some stocks have a brand to them. The brand doesn't just apply to like clothes and shoes and stuff. It also applies to the stock. Apple has a brand that it only goes up, and so does Tesla. But, these stuff that don't have a brand, like Cumulus Media or
Yeah,
ImmuCell, they're so dirt cheap, and people aren't actually buying them. And that's something that people don't realize, that these companies are cheap. These are the things that you want to be owning. You want to be owning stuff that other people aren't looking at and they're not owning. And those are the kind of things that have to go through your head when
yeah.
you're looking to buy a stock.
I wonder, how do I get the only go up factor on Augury? I would love to have a $1 billion valuation with revenues of nothing every month.
Yeah, I mean,
um,
exactly. You should probably like ask Chamat to spec Augury research. You know, Augury
hey, I
research.
got this really awesome journal business. We got, it's a journal business, but it's the online chat room that will really get you 90% gross margins. We're basically a tech company.
Exactly. You're a tech company, and you've got these high gross margins, and therefore, you deserve like a $1 billion valuation.
Yeah,
Man,
100,
like
1,000 times sales.
exactly, and Market Champions is $1 million company.
Yeah. And
Like if I
that's what
make
and that's what I'm hoping. Hopefully, maybe You might get lucky, and okay, we don't have a market crash in 2021 or 2022, 23, 24, right? And we have, this stimulus kicks in, and we're looking at a scenario where we do have 4 more years of bull market. Like, could you imagine that? Could you imagine if we, just go up, 10% or 15% every year for the next 3, 4 years? I mean, that's a lot of time. And if the market is this crazy now, I don't know. I mean, how crazy can it get? I mean, if there's going to be all these dumb money being thrown around at these crazy businesses, I don't
Exactly.
know. 4 years might be a lot of time. I might be able to get Aubrey under my belt, take this thing public for it, be a SPAC or something, and cash out.
Yeah, you probably should. Like, you probably you should just sell your stake on as soon as lockup expires. So you could
Man,
do like
it's
a
just
reverse merger or something with Aubrey right now.
it's
Find like some
it's
cheap.
it's crazy out there. But I mean, these people, and this is the thing, is like I talked to, you kind of mentioned earlier in the show that you wanted to focus on your podcast, your YouTube channel, and kind of marketing. I think that's incredibly important for young kids to do. And I'm doing it myself. And I have a little bit more money than you guys at the younger age. And it's like, I can create a business and get a dividend of X amount of dollars every month. I'm not going to find that on the stock market. And
Right.
with the way that social media works, it's like, I mean, I yell at myself every single day for not putting out content, right? It's so incredibly valuable to put out content, whether it be for, your personal brand, a business brand. I mean, this content stuff is consuming everybody. It's like
Correct.
TikTok, Instagram, Snapchat, Twitter, like just a you could write a poem, you could just put up a video of you doing a dance. I mean, it doesn't matter. There are users that want to absorb, your content. And I literally see people getting lucky every single day where it's just like one video goes viral and that does it for them.
That's all it takes. And people think that you need like 1 million or 2 million subscribers to actually make money. You don't. You need if you get 20,000 views every single day, and for that you need roughly 5 to 10,000 subscribers, which is not even that much. So if you get 20,000 views a day, you get You can get monetized by YouTube and get paid about $50 a day. And so if you live in a pretty cheap city, that's literally a rent covered. So you could literally go focus on something else. So, for example, if I wanted to be a full time trader, I could have sort of YouTube and my podcast, pay out sort of my rent and my expenses, and then I could just focus on trading, and I wouldn't really have a problem. And that's what I'm looking to like accomplish by the time I'm 21, which is 2025. So, move to like a cheaper place in Canada, say like Ottawa, which is the capital. That's probably like where I want to go personally, but uh, so yeah, because it's really cheap there, and the people are pretty good. It's a pretty safe place to live.
Mm-hmm.
So yeah, so if I could go and live there, and how like YouTube and my podcast make me say $1,500 or $2,000 a month. Um,
And
no,
that is it's so reasonable, I think, in today's world. Like, it really is. I remember when
right,
I hopped on Twitch and I was doing, just researching stocks on Twitch, and I made like $65 in 2 episodes. If I was something I showed up and did every single day, who knows where I would have been by now. It's so possible to, do that. And I think the biggest thing is like, you're really great at it. I've been following your Instagram page for, I guess, a couple of years now. And, not everyone is that hungry. And I think it's super important, especially for younger kids, but also older people, because a lot of the older people are scared to kind of get on camera and put themselves out there
right,
because, they're afraid. I think they kind of have this idea that you have to be an expert or something like that, but you really don't. What you need to do is, connect with people and basically just educate them. If I can help someone understand a little bit more about risk to reward, that's it. I help them. I'm doing my job, and they follow me for that. And just like you talk about investing all the time. Some of my favorite content of yours is like, I love when you teach me about investing history, because you know more about, the history of investing than pretty much anyone I know. And I think it's super cool that you kind of got into
Thank
that
you.
and, learned that growing up. That's super valuable.
I think like history is probably like the best teacher because there's a quote by I think Mark Twain which goes, history doesn't repeat but it does rhyme or something like that.
Yeah.
And so I think it's like very important for like everyone to learn history. I've always liked learning history, and when I say history, like I mean like modern history. So what happened in the 1900s, I find that like very interesting. I don't really care about like ancient civilizations and stuff, but what
Hmm.
happened in the 1900s, because there were like many important things, many important economists, many important things, especially related to the stock market. For example, the 1929 crash, and then we saw events like the U.S. going off the gold standard, and we saw the rise of people like Milton Friedman and von Mises and etc. So now I find like learning history to be very exciting and very interesting. But now one of the things that you occasionally like think about when you learn from history is like you lose like a sense of optimism. So, for example, in the from 1970 to roughly 2010, that was sort of a prime time for being a hedge fund manager. So, is there so like sometimes I wonder if there's like a future to running hedge funds, because in 1970 that's when like it started big, like Julian Robertson, Michael Steinhardt, George Soros, they all got started in around 1970. So I think like that was probably like the golden era of hedge funds. But I think like as long as there are rich people around, there's still going to be a demand for hedge funds. But no, there's not going to be all those big trades like what happened before. For example, like George Soros shorting the pound, you probably won't see too many pegs in currencies by the time say I start running a hedge fund, or you start running a hedge fund. So
Hmm.
we still have to focus on stocks and companies compared to say currencies and bonds and stuff like that.
Yeah. Yeah, and I think what else is happening? I think I know for me personally, I'm very focused on trying to find an edge in the markets, right? And for me, since my account is so small, uh, that opportunity currently is in, shorting small cap companies. A lot of people that, there's just not a lot of people doing this. So that offers me, a pretty decent opportunity. I know we kind of we look at them together and we kind of laugh like, what are people buying here? Uh, but this is real life, and people are buying these really terrible companies at, pretty absurd valuations. I think one of the things that's important as an investor is to actually know where to look. And
Right.
right now in this market, it is where for me, where my edge lies is just focusing on these, smaller cap companies. I know earlier in the year you saw me try to short Carvana, Wayfair, and some of these other larger companies. That didn't work. I tried 2 times on basically each stock, got ran over, stopped out immediately, and quickly realized, okay, the market is changing here. Uh, you know, if I didn't realize that the market changed, it was like a very, I don't know if you ever been like walking down the street and then you just get slapped in the face by like a cold front, right?
Right.
That was the market kind of March, May. And it was like very defiant, and I was like, oh, you know what, this is not working. I really need to figure out what is working, because I got a full year that I got to take care of, and I'm trying to, I want to have I want to alpha every single year. And for me that was just saying, okay, what else, what's the playbook here, what's my main play, what's my go-to, and that was just micros. And you know towards the end of the year, then we had, guys in the chat like you, Al, even Andy, finding some really cheap businesses. And I didn't even make any big bets, but they're all making me money. And it's just been a nice sweetener to have kind of going into the end of the year. And and I missed a big opportunity. I think we all kind of missed this big opportunity when the market
Right.
did take that huge pullback, and we kind of were all like, oh, we don't know what to do.
It
But
was. It was more of like, we thought it was like the beginning of something big, but we didn't realize that it would just be one drop and then boom, would go off again.
Everyone was saying V-shaped recovery, and I was like, no way, like
This
this
thing
is
is
gonna
like
be bad.
bad. Yeah, exactly.
I guess it was kind of bad. Like this, I mean, coronavirus has lasted a long time. It's still a thing where I don't know what it's like in Canada. Why don't we talk about that? What is COVID like in Canada, where you live?
It's pretty bad actually. I believe the government's gonna lock down Ontario right after Christmas. So right after Christmas, we're gonna have a lockdown. So
So are
I still
people
don't get like
going out and stuff? Like, are your friends taking it serious?
I mean, we have to wear masks at school, but then school is sort of different. What they do is right now you go to school, you only have like one class, and
Mm-hmm.
that one class has 15 people in it. It doesn't have like the usual around 25, 30. That's like 14, 15 people. And then so like they've divided the class into sort of two cohorts. So the first cohort stays at home on one day, and then the other cohort goes to school, and then they switch around during the week. And so, and there's only two classes. There's only two classes instead of four. So usually you had four classes in 2 semesters. They have two classes and 4 semesters or four quadmesters. So they've changed that, and then you have to wear masks at school. Um, you've got. I think they've shut down the mall as well. So that's
Mm-hmm.
there. So they're taking it seriously here. So it's almost like it's April, but then no, the market is still high. It's not collapsing.
Huh.
So
That's really interesting because where I live, it's kind of, I don't want to say it's back to normal, like, but you basically just got to wear a mask to the grocery stores and stuff. And like my friends and stuff are all going out to bars and stuff. And it's concerning to me because I don't want to get sick, but it's like,
it's risky.
it's kind of demoralizing in the sense that some part of America doesn't have enough discipline to say, hey, look, we're going to basically pass up on having fun now so we can get back to normal life, in 6 months or 7 months.
Correct.
And we're just so reliant on the idea that we have a vaccine coming. It's a little bit like, it's kind of like, guys, we should, maybe, try to be a little bit better than that. But whatever, people are going to do what they want. Kind of like they're going to buy Tesla at, a half a
That's their
trillion
way of
dollar
having fun
valuation.
during lockdown. Buying
Yeah,
Teslas like the right way to have
it's
fun during
just it's
lockdown.
just a complete lack of discipline across, every
Right,
you know
exactly.
part of the world. Okay, so to wrap things up, I wanted to ask you one question. What's an idea that everybody thinks that they're right on, but you think they're wrong on? And it cannot be Tesla.
See, could I say like a more of a macro idea compared to a
Sure. Yeah.
I think people are so if you've seen the news, the dollar is selling off. I think people are wrong on that view of the dollar. So I think that's probably like I have disclosure. I am long UUP calls. UUP is a long dollar ETF. So I'm long calls expiring in June next year.
Okay.
It's primarily as a hedge, but no, I want to. So if the dollar spikes and I'm right on the dollar, no, I will make money. So I think like that. I think they're wrong on the dollar. I
What kind
think
of what kind of bet are you getting there? Are you getting like good odds? Like, can you
yeah, it's
make
like
it?
really cheap.
You can
It's
make a
really cheap.
significant amount of money.
Yeah, I got a call option. The implied volatility is 7%. It's almost like
Good.
they're pricing that the dollar won't rise. And if you see what happened in March, the dollar moved like 5% in a day. And so what that means is implied volatility would be 80% if the dollar has a 5% move in a single day. And we're seeing these more whipsaw moves
Yeah.
during corrections. And if we see that again, sort of in the U.S. dollar, if implied volatility goes from 7% to 80%, even
How
with like
weak is the dollar right now?
really weak. It's been collapsing since March because
Yeah. Uh-huh.
people believe like the Federal Reserve is printing, but then they're actually not printing, which is something that I've actually spent a lot of time learning about how the Federal Reserve actually works. So basically, what's happening is the Federal Reserve is recapitalizing the banks in a certain way. So they buy bonds from the banks and then they give them bank reserves, and the banks lend against these reserves, and that's what actually creates money. So it's bank lending that actually creates money. It's not the Federal Reserve. And
Okay.
that's what actually increases the money supply. But then the people who are short the dollar believe that the Fed is actually creating new money, and they're just printing it off. And you've got the money printer go burr meme as
Yeah.
well to back it up. So I think that that's that sort of fits into the Soros playbook correctly, because Soros believed that there would be a misconception that drives trends, and you've seen this downward move in the dollar this year. I think like the misconception that's driving the trend right now is that the Federal Reserve can actually increase the money supply, and more importantly, the Federal Reserve could possibly solve an insolvency event, which is what a lot of people like Raul Pal and another guy I watched on YouTube. His name is Steve Van Meter. He runs a macro fund and he runs a macro show as well, as talked about. And so the dollar would spike regardless in any kind of bad event. And the Federal Reserve does not have the ability to stop an insolvency. And the issue is a lot of foreign denominated debt foreign debt denominated in US dollars is coming due over 2021 to 2022. And now when that comes due, the demand for dollars rises, and there are not enough dollars in the world to actually sustain this demand. And if that happens, say over the starting part of 2021, and this misconception reverses, so people eventually realize the Federal Reserve can't do anything, and that will cause a massive move upwards on the dollar. So I think like number one, the calls are really cheap. So even if you like put 2%, you lose only 2%. Um, the ETF is UUP for anyone listening. And again, it's not financial advice, so full disclosure. But I think that I think that's a very good hedge, and I think that it's a pretty good possibility that the dollar actually surges next year.
I actually kind of really like this. I'm kind of buying into this thesis that you have there. My only concern is like the timing, right? The timing is
Yeah.
really important, and you think you're giving yourself enough time with calls that expire in June.
Yeah, that's probably the hard part. Timing is always the hard part. So
Yeah.
people have a lot of the smart people who actually understand how the Federal Reserve works. They've been calling this since I think 2018. So I think that it makes more sense to play it right now. So I think like the probability is higher right now, but of course
I was
there's nothing that's 100% probability.
I
So I
like
think
that they were coming out with this idea in 2018 and way early, as it's 2 years later.
right.
That's good. I like finding I just like finding those types of ideas when I'm going through micros. I like finding people that are like super bullish, but like maybe 2 years early, or
Right.
a couple dollars too early. And then I'm getting a really good deal and the thesis is still intact, but it hasn't played out, because generally what happens is people kind of lose hope in that original idea. They don't have the patience to kind of hold through it. So I like that idea kind of started in 2018 as well. I'm going to look into this. You're going to have to share this one with me
Yeah, sure.
off the
I could share.
record.
Yeah, for sure.
Awesome. I like that. That's a great way to end it. I love that idea. That's a good one.
Just made Tyler from a bottom of investor into a macro speculator. So
I never do any macro moves, but 2%, if we're talking enough upside, and I can wrap my tiny head around this idea, I might toss a bone or two at this.
for sure. And yeah,
All
thank you so
right.
much for having me on. It's awesome.
I'm so glad to have you on. One, I always love talking about investing with you, and I know we've kind of been talking about getting you on the podcast, for a while now. I'm glad that we finally made it happen, and it was a great day to do it. You're done with school.
Yeah, exactly. So happy day.
All right, my friend. Any closing remarks?
Yeah, nothing really. Just be careful out there. There's a lot of crazy stuff going on. So yeah.
Keep your portfolio safe. Keep
Right.
safe from COVID. Give Sri a follow on Instagram at Elite Investor. Give him a follow on any podcast website. You're on them all, right?
Right. Yeah.
Market Champions. It's really I want to say 5-star out of 5-star podcast. He gets some really great interviews. And he is a truly great host. And don't forget to check out his YouTube channel that's brand new. He's also put some really great clips from his podcast actually on the YouTube channel. So make sure you guys check them out. And Sri, thanks again for coming on Not Your Father's Stocks.
Thank you for having me. Great to be here.
All right, buddy. I will catch you later.
Got to stop the recording.
All right. I'm going to cut that out.
Yeah. All right. Yeah, you want to...